Hello traders and welcome to another video review. Today is Monday, December 27, 2021. We are going to start the last trading week of 2021. Let's take a look at the Forex calendar. Oops, we don't have any important data scheduled for release today, so today's review will be all about the technical analysis. So let's start with some majors. We are going to start with the US dollar index. This index, as you can see, is still trading kind of a high because despite the fact that we broke below this short-term trend support recently, we bounced from the upper channel line, then we bounced the second time, and the volatility recently is dried up, which is why we got only the high at 96.15 and the low at 96.02. So there isn't many people trading that time of the year for now. However, we can still assume that this 5-wave impulsive advance towards the level of 96.90 had been completed, and this is the corrective cycle that should lead towards the lower prices like 95.50 or 95.24. Those two levels are the key short-term technical supports for the markets, and they should be hit very soon. The market might bounce from this level and continue the uptrend above 96.90 because the momentum is still positive. The momentum is still, it's not very strong because it's only 53 points, but still has been hovering above the level of 50 for quite some time right now. So the trend on the overall trend on the US dollar index, as you can see, is up, and this trend has been like that since apparently the beginning of the 2021. So that's the first wave, 2021 correction, another wave up, correction, another wave up. It looks like the US dollar is rising up again. It might get towards 97.70, which is the high of the 2020. This is the first of the July 2020, so we might get there quite soon enough, and then of course continue even higher towards the level of 99, and then maybe, just maybe, we can even hit the highs of 2020, which are at the level of 102.99, basically 103. So there is still a long road for the US dollar index. However, it looks very good for both. US dollar index, euro dollar now. Euro dollar is right now consolidating in a very narrow zone because the recent volatility has dried up, and none of these levels is now the key level for the US dollar. We are bouncing up and down in a very narrow zone between 1.1225, 1.1373. So nothing happened here. However, please consider the fact that the euro dollar is extremely oversold. And it's trending down. It's trending lower and lower. It broke below key technical supports. Now this is the technical resistance, of course, 1.1422, 1.1501, and as long as the market trades below this level, we are still in the downtrend. Only a sustained breakout above this level would be considered bullish for euro. However, as you can see, we are still inside of this short-term channel. Maybe we should just adjust our channel. Let me put the parallel channel feature here. So let's say, well, this is the most accurate channel that I can find. As you can see, we are trending still inside of the channel, despite the fact that we broke below this lower line. We bounced back up within a few days, keep trading here below the middle line. So it looks like the euro dollar is still in a downtrend. So the US dollar index should be going up, and this is our confirmation, first confirmation of the current scenario. Let's take a look at gold. Spot gold market is, as you can see, moving higher, mostly because this level 1760 has been strong technical support, and despite the two attempts to break below this level, there was no daily candle close below this level, and we bounced right back up towards $1,807, made a local high at 1,813, and we are currently trading very close to this level. So it looks like bulls are right now in control of the gold market, but this might be only a temporary change of the control, because in order to go way higher than this current level, we have to break, let's say, above, let's just put this zone on the chart, 1,000 and basically $900. So this is the zone that it's preventing the market from rising higher and return to the uptrend, this red zone here. Of course, on the other hand, we got this zone here, which is the key demand zone, the green rectangle. So right now in the long term, we are just in between the levels, the important levels. As you can see, it doesn't actually looks like any big trending move up or down. We just sometimes we're going up, sometimes we're going down. So this is a typical kind of a trendless market behavior, right? So we are going from the overbought conditions to the oversold conditions, overbought conditions, oversold conditions, until some event will trigger a bigger move, a more sustained move on the gold market. Let's take a look at the S&P 500. So the S&P 500 is again close to the all-time highs, despite the recent correction that has retraced 50% of the last big wave up. This is the 50%. This is almost 50% again. We have retraced back on every drop. And right now we are trading around 4,727 points, so very close to the recent all-time highs and the upper trend line. As you can see from this chart, we are still trending inside of this channel here, and this is a typical behavior of the uptrending market, which means there is no indication that the uptrend on the S&P 500 is completed or terminated. We are still going up with the occasional short-term corrections or pullbacks. Next target, 5,000 points. And last but not least, let's take a look at Bitcoin. What is Bitcoin doing? Well, we are still having trouble to break somewhere above the 53,228. Recently we broke above this golden trend line. Very good. We made a pin bar here with a high at 51,819, which is nice, and now we are consolidating the recent gains in a narrow zone, as you can see here. Of course, there is still key technical resistance, as I said, 53,228. There is another trend line here, much more important than the golden one. This is the blue trend line. So any break above 53,228 and above the blue trend line will open the road towards 59,528. And if we break above this level and we break above $60,000, then we have the road open towards the all-time high at 68,959. As long as we trade below the blue trend line, below the key technical resistance, the outlook remains kind of a bearish to trendless market, basically. So we might have some sort of the accumulation here. Let me just adjust the current technical support levels. Basically, it looks like, yeah, we don't need this line anymore. Maybe this might be a little bit helpful because we see the technical resistance here. 51,846 is the local technical resistance for the Bitcoin for this week. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.